Hey, yo, what's up, everybody? What's going on, outliers, apes, outlier, apes, all the combinations thereof. Happy Saturday, I think it is. The days are all kind of the same to me. It doesn't really differentiate too heavily, but happy Saturday, I think. That's what the computer's telling me. What's going on? What's everybody been up to? I have been running deep on a ton of different research, not just knew it was going to do it. Not just GameStop related, but just market research writ large. And one of my favorite things about this specific segment is it literally is very specific research time for me, which I actually really enjoy doing that. It makes it a lot easier for me to dive at least as far into detail as I can, which is what I like to do with this kind of stuff. So that is what we're going to do today. Now, we can start by taking a quick look at GameStop as a whole. We could talk about its performance this week, which was really, really interesting. I was going to do a video that dove deeper into detail on it. I talked a little bit about it on a video. I think I relaunched that Friday because I did a video about Nvidia and GameStop because both of them had my eye the past week. So we can start there and then we will pivot over and get into all of the goodness that you see here. As I'm actually looking at some of the other titles in here, it's kind of funny to me because that's Big Daddy Dave Lauer, and I normally sort it by date, so I don't see those, but that's actually pretty good. And then the other thing of note is I was texting with Newton earlier today, getting an update on the specific due diligence that he really, really likes. So he has one that I want to make sure that we take a look at. I still intend to go in order, so it might be covered in this session or not, but When the River Runs Dry by Girk. That's the one that he likes. So I'm gonna find my way into that one and take a peek there. So off to the races. Here we go. Lucas says, yo, quick question. Why do we typically use log charts instead of linear ones? Which is actually kind of funny because most people use linear charts. Log charts are fine. There's nothing wrong with them. But the main thing about a logarithmic chart is it makes things relative to the size of the move. Think of logarithmic charts as essentially plotting things as percentages, so that if you have a $100 stock and it goes up by $1, that's a different percentage move than if you have a $10 stock that goes up by $1. When you're looking at a linear chart, it's the same $1 move regardless of the underlying price. So the magnitude of the move is very different. So most people actually use linear charts, and it's a smaller cohort that use log charts. I've gone back and forth trying to see which I like better. And sometimes depending on like what I'm trying to analyze, mostly if I'm doing some sort of pairs trading, I like to use log charts to assess comparative strength to different things. But yeah, funny enough, most people actually will use linear charts, and it's just because it's a little easier. It doesn't make a massive difference in your technical analysis as long as you understand the scale. So completely cool question. All right. So on the other screen here, I do have the Diamond Handbook. Now, one of the things I wanted to ask you guys is my understanding of this Diamond Handbook that we're working through right now, this one. My understanding is that it's essentially synopsizing all of the prior DD leading into the time that this book was made. And it's 842 pages. So we're still plugging through there. It's not exactly a exceedingly fast read, and geez, there's a lot to get through, isn't there? So I'm going to have to keep doing what I'm doing here, which is using ChatGPT and other AI tools to help me synthesize the bigger reads so that I can still try to derive something from them. And what I'm doing on my own is in the evening before bed, I normally do a lot of reading about markets, and I've just been picking a DD from this and reading it end to end. But that's kind of slow for the live stream. So for the live streams, I'm kind of trying to move through it at least at a reasonable clip so that it's not like you guys are just sitting there watching me read, because I'm also illiterate. So it takes me a long time to read stuff. It's like I have to like sound the words out in my head. You know, it's this whole thing. It's this whole thing. Whoa. Chat with my documents. That's kind of cool. Oh, the disrespect. Now, what we could do is we could split this into 2 different files. I could cut it in half if I wanted to, but I don't actually care that much because I want to read through it. Now, what I do need to find are our previous bookmarks, which I'm pretty sure I did it last time via a comment so that I could find it. Right? I think that's correct. Is that right? I did this last time. I did this same exact game last time, and it took me too long to figure out how to find where I was. There is a way for me to find my comment, maybe in here, edit. Yo. Add a comment. What other stuff is in here? Roaring Clitty says, because we chat a bit about your favorite DD that you read on your own this week. No, so all the DDs that I'm reading, they're the old ones that we're skimming through. So it's just so that I'm not missing anything. I'm actually very purposefully moving in line with you all on the live streams as I'm opening up new DDs. But for some of the older DDs that we've already taken a look at, we've gone through and we've kind of skimmed through some of the stuff just because, again, some of them are pretty long. So I'm not actually like opening up new stuff yet. Richard Snook says Control P. I want to trust you. But I'm nervous that that's going to, all right, let's do it. Control P. No, that's print. That's Control Print. I was like, what? Well, don't worry, it doesn't automatically start printing. All right. Yo, let's get your eyes on the same thing I'm looking at here so that you guys can tell me where to find the bookmark. I'll tell you, I'm real savvy with the old tech stuff. No. There's literally got to be a way to view comments. Here it goes. Final. I was going to say it cannot be this terrible. See, that's the thing, is you have to go to something that calls add comments as compared to like view comments, which is stupid. That Lauren says, stop trusting people. Well, you know, it's the P didn't make me super nervous because I figured that it was some sort of print hotkey. I didn't know what it was, but yeah, I know how people can play on the interwebs. All right, so this is where we left off. Slimy. So how do I delete this? That's beautiful. And let's get into, this is House Cards Part 3. All right, here we go. So we already know that there's instances where short interest is understated, and we know that short interest has exceeded. Total float, we know this. We know that companies have been misreporting their short interest. This is also, Lauren says, we don't do new things and we don't trust people. Got it. Lauren, I'm actually going to start to use that as my ritual before I come on the live streams, is don't trust anybody but Lauren and don't do new things. That's what we got to do. All right. Yes, we know this. When the SEC relies on reports that broker-dealers provide, FINRA takes years to reveal the lies within these reports. This is a little inflammatory, have to be honest. I understand what they're saying, but I do think it's a little more inflammatory than it probably needs to be. By the way, what color highlight do you guys like? Do you like traditional yellow? What's your vibe for the highlights? This is too dark of a yellow, I think. Oh, no, that's okay. That looks like a nice yellow. I can do this. Orange in Solomon. Orange? Who uses orange for highlighting? Really? That just looks weird. I don't know about no orange highlights, y'all. All right, fine. I'm a man of the people. I'll put it to a fucking poll. Highlight color. There's going to be a lot of shit that we have to highlight together. Yellow, orange. Definitely not blue. Blue's not a choice here. I don't fuck with blue like that. What other choices do we have? We got lilac, light purple, light purple. Let's see what you guys pick. Whatever you guys pick, that's what I'll use. I guess there's green. Fuck, I forgot to add green. Whatever. Right now we're 57 orange. Which, I mean, to be honest, it kind of makes sense, right? Because I always rock with the mandarin orange or the mango orange. I guess that actually makes sense. All right, 50% orange. We'll call it done there. That's so it shall be. Orange it is. Do we like dark orange or light orange? This is the light orange. That's the dark orange. It shall be orange. I feel like the orange is the right one. Yeah, okay, agreed. I feel like this is the correct choice. All right, awesome. Let's continue. Broker-dealer can lie without immediately facing the consequences. Again, so here's the thing. One of the things to highlight on a side when we're looking at this is my approach to analyzing stuff is genuinely to try and remain as objective as humanly possible. Like that is exactly what I try to do. The problem that I take with the word lie here is that it paints a picture holistically that the reporting is being purposefully misreported by everybody across the board into perpetuity. And that might just be the general inference. And I'm not saying whether that's right or wrong, but for me, I would frame it more as like misreporting, whether it's driven by purposeful intent. That's something that we would get into in specific instances. But there is a reality that a lot of these institutions do have massive reporting functions, and it's not always perfect. Look at any job you've ever worked at and look at the required paperwork filing process. It's never perfect. There's always errors. So all I'm saying is that I wouldn't feel comfortable chalking up the reporting always, forever, unanimously across all instances being lies, being purposefully done. Is that the majority of cases? I don't know. Maybe. It definitely seems like it's known in certain circumstances without a fucking doubt. So I'm not saying that there's not lying going on. There absolutely seems to be. But I try to emphasize that point specifically. Roaring Titty, hey yo, what up, Roaring Titty? Roaring Titty says GME has a shit ton of errors over and over and over again. Here's the problem. If you are to look around, have you ever had this sensation while you're driving? You just get a new car, or maybe you got a used car and your car is white. Or if you watch Family Guy and you like Cool Whip, it's white. And as you're driving around, all of a sudden you start seeing all these white cars. You're like, where the fuck did all of these white cars come from? They're everywhere. I've never seen this many white cars in my life. I just got a white car. Everybody obviously is just vibing with me in my white car. You know exactly what that is, right? It's an attribution that mentally happens when you pick something of interest and you begin looking for it. You have a white car, you like white cars, you just bought your white car, everybody now has a white car. So with GameStop, I noticed that the default everybody has is that everything is fucked, it's all manipulated, this is all being done on purpose, and it's because there clearly are instances that it has happened. I'm not saying that it's not the case. It could be the case, for sure, it could be. But what I'm saying is with especially the GameStop crowd, the default that we tend to see is manipulation, is lies, is stuff like that because it's what we're looking for. Fun fact, if you go into any other stock, you will find some of these same things. Not saying to the same exact things, not saying to the same degree. I'm not saying anything like that. What I'm saying is that if you look at Wells Fargo magically opens up new accounts for people that don't exist. It's complete and utter bullshit. There are other instances where Wells Fargo was thought to have opened up bullshit accounts for people. They were starting to become ostracized for it. And then after an external audit, it actually turned out that they didn't do it. So it's just important to try to remain objective when we're trying to read this information, because it is subconsciously going to skew our further analysis and our understanding as we progress along. So and I go into that whole tirade just to highlight the term lies here, I think starts to send people down a certain mental path inherently. And you should just be aware of it. You could fully agree with it. That's cool. But a lot of people, they'll just read this stuff. They'll take it as face value. They'll say, oh, yep, these motherfuckers are purposely lying to us all the time. And that's now the base going forward. And it should be a conscious choice if that's what you choose to believe. If you choose not to decide, you still have made a choice. What is that? I think that's a Rush song. I think it's a Rush song. Let's go. The broker-dealer can lie without immediately facing consequences, which we saw. And here's another thing to highlight in addition to this realistically. The fact that the consequences aren't that fucking bad, right? So I think in the last DD, I was on my little tiny setup, so it was hard for me to read all the details. But I mean, the penalties are fucking jokes. Even a $600,000 fine, that sounds kind of aggro, but for somebody like Goldman Sachs, it's a cost of doing business, dog. They don't even fucking care. So another thing to highlight is not just the immediacy component, which is there, but there's the severity component, which is the punishment is so non-severe that why would they care? They don't care. It allows firms to operate in a high-risk environment without exposing how big their risk appetite is. Another example, Wes mentioned Merrill Lynch fined $450K in 16 for using securities held in their customers' accounts to cover their own trades. That's fucking nuts. I need to click into this. Yeah, this looks okay. Run it. Let's see. Now, for a quick highlight, sometimes people will ask me like, Eric, why have you become so obsessed and like spend so much time looking at GameStop? And I've given the reason a bunch of different times, but I want to highlight a specific element of that. Because if you were to post on a place like X, and if you were to post, do you think Merrill Lynch is doing this? Most people would probably say, yeah, I believe so. And it's just because of the way that the question is framed, and most people are distrustful of larger financial institutions. But if we were to take an actually well-framed, objective question for this. I don't think a lot of people are aware, myself included, that this is a fucking thing. I did not know this. And it is classic. This is one of the reasons why GameStop is so cool. So what I'm actually going to do is highlight this, grab a screenshot, and the next step is just throw this shit on X so that people can come take a look at the fun facts for themselves and see what they think. Not GME identifying continued systemic fraud again. Perfect. Unclothed Salamander says, hi, on topic of bone cone 35. Please advise if be bone. It's a great question. First off, thank you so much for the $1.99. You know I'm cheap, right? Because when I watch my buddy was sending me a stream, like a clip from another stream where people were throwing this person tons of money during the stream. It was actually really impressive, but they stopped taking the lower dollar amount submissions and skipping over those for the expensive ones. But I tell you what, $1.99, get my attention every time. I'm here for you. But like we talked about on Friday, the probability of being bone there was pretty low. So the probability for this coming week is, I surmise, also likely fairly low. We can take a quick look just so that we know exactly what it do be. Let's grab good old GameStop, and then let's take a look at our probabilities, and then let's take a look at the probability of a touch, just like Catholic priests. And let's take a look at a touch of 35. 22% is what it's rolling at as it currently sits. Holy shit, this is 378 pages. Fuck. Oh my God. There's got to be a fucking... Oh boy. Dude, I'm still just in the fucking addresses. Here we go. Without admitting or denying the findings, the firm consented to the sanctions and to the entry of findings that the firm inaccurately reported certain of its listed option positions to the large option position reporting system, LOPR. Good old LOPR. Y'all know about LOPR. In violation of New York Stock Exchange American Rule 906, the findings stated that there were approximately 13,198 instances in which there were inconsistencies between the short positions held in the firm's accounts that required reporting to the LOPR and the short positions that the firm actually had reported to LOPR. In these instances, the firm had inaccurately reported its reportable options positions to LOPR because of proprietary system flaw caused the firm to omit the short contract quantities from being reported to LOPR in firm accounts that held short straddles. The firm subsequently corrected this flaw. So we can look at this and we can say two things. The first thing is we can say, don't believe them, system flaw, complete bullshit, they're lying. We can say, believable, systems do be flawing sometimes, plausible. This one individual instance, I would be indifferent. One instance, indifferent. There's 55 disclosures in here, and it looks like, again, you can look at 55 instances and you could say, well, that's obviously a big problem. And it might be, it might not be. the reason why I say it might not be is when you look at a company as big as Merrill Lynch doing as much business as they are, like their mistakes are going to be at a magnitude that to the normal person will sound crazy. But to a firm that's doing billions of dollar business internationally, it's super complex. So it's not insane for it to have issues like this. So the problem here, and that I don't know the answer to yet, which I'm actually going to see if there's anything that I can find relating to it. I'm going to download this and I'm going to throw it into GPT. And what I want to do is see if there's any evidence of purposeful misreporting. And again, that's not to suggest that there isn't, even if this says that there isn't, but I want to start there. Going back to what I tell you guys all the time, my goal is objective analysis. So read this FINRA report and search for any evidence of purposeful misreporting or gross negligence of reporting. Let's see what it says. I'm actually curious what that'll come back with. It's running right now. I'll let you know. Okay. The regulatory arbitration disclosures, they indicate 55 regulatory events and one arbitration event disclosed about the firm and its control. These events involved regulatory actions, civil judicial proceedings, and financial matters that the firm is required to disclose. Failure to file suspicious activity reports, SARS. They were fined $6 million for failing to establish adequate policies and controls for reporting suspicious activities as required by the Bank Secrecy Act. The firm failed nearly 1,500 SARs over a decade due to applying an incorrect monetary threshold for reporting suspicious activities. The oversight suggests a significant lapse in compliance with regulatory requirements and potentially accounting to or amounting to gross negligence. Okay. Misuse of customer cash. Here we go. Merrill Lynch was also involved in a case where it misused customer cash to generate profits for the firm. The SEC found that Merrill Lynch violated the customer protection rule by engaging in complex options trades that artificially reduced the required deposit of customer cash and reserve accounts. This violation exposed customers to significant risks and resulted in $450 million settlement with the SEC. That is a glaring issue to me. That kind of thing is not like and again, you guys, hopefully you can tell, hopefully by now, when I'm looking at this stuff, I always apply a skeptical lens and benefit of the doubt. And it's because I want to find information that is as representative of reality as possible. This is a massive fucking issue. And you don't do this by mistake. There's no world here that they're using customer profits or customer cash to generate. Like, there's no fucking way. So this is crazy to me. Also, fun fact. I don't know if you guys know from X, there's a dude named Kevin. What the fuck's his last name? He talks about GameStop a lot. There's a dude named Kevin something that talks about GameStop a lot, but I connected with him and the game plan, I'm actually going to do a podcast episode with him. And this is one of the things that I want to talk to him about because I think he's from the professional management side. Thank you. Day Swag. That's it. Malone, Kevin Malone. And I want to bring him on the podcast. I don't think we'll do it on a live stream. I think we'll do it on a podcast so that we can get a little deeper into detail. You guys know I love doing live streams with you guys, but sometimes it's difficult to be as interactive as I like with somebody else on a live stream when it's typically like me just interacting with them. So, but I want to talk about this kind of stuff from their perspective. Negligent misrepresentation in annuity sales there's a lawsuit filed alleging negligent misrepresentation by brokers regarding the features of a variable annuity sold by a retired customer. The claim involves allegations of professional malpractice and failure to disclose high internal costs associated with the annuity. Give or take. This one is the worst to me. That one's like fucking egregious. That's nuts. Okay. Don't worry, y'all. We are now past the first page of this single DD. Lord, help me. Remember when we mentioned in SEA 15C3, the case with Apex, they were asking customers to book short positions to either cash account or short margin account, protects these customers from alarm brokers. Yeah. Okay, so we just read all this stuff. Merrill made it sound like, hey, yo, Lauren, I don't know if you know this, but you and your long legs have a secret admirer in Day Swag. In case you guys don't know, there might be a love story unfolding in front of our eyes with Day Swag and Lauren, because Day Swag, like most of us, is enamored by Lauren's crazy long legs. So I hope that you guys have a chance to you know, just turn it into a budding relationship wrapped around GME. So we read all this. True exposure interest unknown. Yeah. Okay. Yep. 64 occasions, 45 occasions. They continue to accept customer short sale orders and securities which had active failed to deliver. This isn't as crazy as you think it might be. Oh, I can generate an image. Hold on. I got to see what that would generate. Yo, fucking let me, no. I just want this. Generate an image. Sure. What do we get? Is it going? Looks like it's going. Let's see what it gives us. Ooh, what the fuck is this? What the fuck is this? Is that hair? Or are those cheekbones? Does she have like two-tiered cheekbones? And where's the fucking rest of her glasses? And where's this arrow coming from? He just has like a little fucking arrow thing. Now that's a beast of a comb over. And he has multiple name tags, which is good. All right, great. Now that we know what AI thinks this looks like, which is fantastic. Lauren says long legs and gold chains gets them every time. Lauren, you got to not sell yourself short, because if you remember, your gold chain has diamonds in it. So it's a diamond studded gold chain. And you also, I think you had a cell phone in one of the masterpieces. So I have to be honest, if I ever do merch and make like t-shirts, one of them is going to have to be the Lauren drawings, because that would just be fucking hilarious to have. I would love to walk around with that on a shirt and just have everybody look at that and be like, yo, what the fuck is on that shirt? And I'd just be like, yo, you wouldn't understand. Like you clearly don't understand art when it's right in front of your eyes. So there's no helping you. Yes, we know this. We know this. Okay, so this is just, we know all this stuff. I'm always down to laugh at the ass clowns. We know this. We know this. Okay. What is this thing? No. Let me click this. No, I don't want to edit the fucking text, bro. Just want to click the link. Thank you. Ooh, cool. All right. I've already read this. I assume you guys have as well. the profitability of stock manipulation. This is a fucking, dude, I love this shit. This is so awesome. Just love that. Again, like, this goes back to the same thing I've been talking about that I really respect about the apes. It is the fact that as a broad group, the fact that the apes are citing something like this in here is very cool, is very, very cool to me. So now I'm going to add another document into this. And I'm going to have GPT summarize this. Summarize this research paper. Fucking awesome. SEC recently adopted, and we know about Reg Show coming online to tighten restrictions, short selling, curb abusive short sales. Yeah. Paper models the market equilibrium when short selling is permitted and contrasts the equilibrium with and without manipulators among the short sellers. I explain how naked short selling can routinely occur within the securities clearing system. Yep. Oh, wow. This is cool. That's really cool. Called floating price convertible securities can resolve the unraveling problem and enable manipulative short selling to intensify. This is sick. All right. Let's see what GPT tells us. Okay. Research paper explores the dynamics and potential for abuse and short selling. Okay. Paper discusses SEC's adoption of Reg Show aimed at tightening restrictions on short selling to curb practices such as naked short selling. Naked short selling occurs when a seller, we already know all that. Market equilibrium and manipulation. The paper models market equilibrium with and without manipulators among short sellers. It highlights how manipulators can exploit naked short selling to create artificial supply-demand imbalances, thereby driving down stock prices. We have to find that section specifically. Then there's floating price convertible securities, which I want to read about. A significant focus is on floating price convertible securities, which can exacerbate manipulative short selling. These securities allow for conversion equity at a floating price, which can be manipulated downward through aggressive short selling just before conversion dates. Next, historical context and techniques. The paper provides historical context recording manipulative short selling, tracing back to bear raids in the 17th century. What the fuck? It describes how these techniques have evolved over time and continue to pose challenges for market regulation. Impact of short sale manipulation. Finnerty analyzes the impact of manipulative short sales on market equilibrium, showing that such activities can destabilize the stock prices and undermine market efficiency. The presence of active traders who might mistake manipulators for informed investors further facilitates this manipulation. Fascinating. Fucking fascinating. First things first. This is old, but I need to see if I can find this dude. He does have an email. Give me a second, y'all. I'm gonna email this dude. I want to see if I can bring him on the podcast. I'm just writing him a standard email, seeing if he wants to join the podcast. I run a YouTube channel designed to share the world of finance and trading with retail investors, removing the typical finance BS. I'd love to host you on my podcast to discuss your findings in your paper and recent market developments. Thanks, Eric. Cool. We'll see if John responds. That would be cool. All right, I'm gonna stand up. Oh. All right, back at it. What kind of mouse do you guys use? Do you guys use like the mouse that moves around? I use one of these. I really like this thing. I was just like wielding it with my left hand, realizing that it's not left hand friendly, obviously, at all. It's very one-sided. Okay, so the specific terms that I want to look for in here are equilibrium. So let's find that. So find, oh, I think I can use the AI assistant. Oh, this is cool. I forgot. I don't even have to fucking throw it in GPT anymore. Let's see how well this thing does. Let's put this out. This section discusses the impact of market manipulators on equilibrium. Entry of a manipulator affects market equilibrium, we know. If the informed investors is shorting shares optimally, it becomes unprofitable for the manipulator to sell shares, okay? Can either be pooling or separating equilibrium. Pooling equilibrium is more likely at the cost of shorting is high, okay? Ow. One of my beard hairs, mustache hairs got stuck in the can. We're already out of the mango orange. We're on to this, to the backup. This one's blackberry. The blackberry one is good, but it's unfortunately not mango orange. All right. A pooling equilibrium is more likely when the cost of shorting. So this talks about the conditions that it occurs. We know all about naked short selling at this point. And oh, it like does suggest. I want to ask a specific question. Just let me fucking type my. Let me type my fucking question in, dude. The hell. Well, we'll keep scrolling through here. There was one other piece that I specifically wanted to read, which was about the floating price. Floating price. Oh, finally. There's like a certain number of questions, whatever. Fine, I don't need to ask you no questions. Do it myself. Floating price. Okay. Recent securities innovation called floating price convertible securities removes an important constraint of short selling by resolving the unraveling problem. Okay. Oh, it's starting from where we're at. Does this not show me like the, oh, whoa. I don't need that. I like when it just shows me like on a Word doc where it is. And the order so that I can skip to where I want it to look. Okay. Popular private equity financing instrument, floating price convertible securities can resolve the unraveling problem because the manipulator does not have to buy back shares in the open market, can obtain as many conversion shares as needed by short selling the price downward just prior to the conversion notice date. The flawed structure of the floating price convertibles contract may actually give security holders an incentive to manipulate the issuer's share price downwards. Damn. Huh. This can increase the profitability of manipulative short selling because he faces less risk of a short squeeze. The manipulator can sell short more shares. Oh, so I get it. The greater selling further reduces the firm's share price, increases manipulator's profit. Yeah, I get it. Okay. Cool. Love that. Great paper. Started communications, short float. Okay. I like that one. Lauren says there's a trading channel and they were talking about one of their star interns is skilled at getting trending trades from people on X and Reddit. Found that interesting. Yeah, definitely. So there's, if you're not familiar, most brokerage platforms now, they actually have a specific series of indicators for market sentiment and popularity, because you literally can trade and run those. It's like very, very, very reasonable to do. The problem is it's the same timing thing as you see with anything else, and you can easily find the stuff just by looking for volume. So yeah, but definitely the short-term momentum is highly tradable. There's absolutely no doubt about it. That's why people like opening range breakouts and stuff so much, because you can trade those really well. Which actually, speaking of, there was a couple short-term trades that I had in GameStop that I haven't looked at. I still have my longer-term stuff. Yeah, okay. Got it. What is this? My attempt to amalgamate multiple pieces of DDs. Uh-oh, this is going to get confusing, because the thing that we're reading now is already a composite DD that's now being composited by more composites. Fuck. All right, in we go. Can this thing summarize this section? There's no way this is going to scroll that slow. That can't be real. Fun fact, it looks like it can be real. How is it scrolling this slow? Yo, there's no way. Let me upload this into GPT. And let me see if GPT can handle it. It's a big ass document, so I might end up having to split this thing up just for efficiency's sake. Right now, GPT is loading it. What I'm going to do is ask, okay, so I'm going to ask GPT to summarize this section. Summarize this section, chaos theory, the everything connection. Every connection. Let's see if it can summarize that section. Let's see. It's trying. That would be great if it could. Oh, here we go. It's doing it. This is great. Okay, so the section chaos theory, the everything connection from the Diamond Handbook appears or explores the application of chaos theory to financial markets. It delves into how chaos theory can explain unpredictable and complex behaviors in financial systems. Okay, here we go. Interconnected systems. The section posits that the financial markets are interconnected systems where small changes can lead to significant impacts akin to the butterfly effect in chaos theory. This interconnectedness suggests that minor events or trades can trigger larger market movements, leading to volatility. Minor events. What does that mean? What do they mean by minor event? Let's see if I can find that. Minor. I'm curious because the term minor event to me is very specific. Okay. Let's see if I can flip through some of this. Context, what's going on under the hood. Yep. Yep. I love this. One of my favorite parts so far is the fact that they literally introduce themselves as their Reddit handle. It's the only Like, look at this. My name is Shark Bait, LOL. Imagine just walking up to somebody like, yo, my name is Shark Bait, LOL. Over the last couple of weeks, Prioritize investigated the story. Deal started something bigger. I've prided myself in a career data scientist. This is interesting. One of the interesting things about this is the timing of these, like the majority of these is actually after the initial squeeze. So for a lot of these people, they were actually in a very, very quiet period. Let me grab Trading View. And let's grab GME. So this person posted April 11th, 2021. 2021. Oh man, that's brutal. So I'm seeing a lot of the DD come through in here where we saw one pop in June and then just down until this year. Rough timing. It's interesting to see a lot of this DD coming out like after the squeeze, just temporally related. David says, just popping in, loved your opinion on GME being a profit sell-off on Friday. Short volume is crazy low unless that isn't something to look for. That's fine. It's not so much like, I don't look at it that way specifically from the context of against short volume, but I look at it against the broader context of how the underlying is moving. That's the main thing that I'm paying attention to personally. All right, let's continue here. Yes. Susquehanna. All right, I'm going to read this. Now we have sus appealing new DTCC regs to make things weirder. Growing position prompted me to start doing a deep dive. Doubled in size since the start of the pandemic. Interesting. So this looks like they're just exploring the structural conflict of interest and whatnot from within Susquehanna. Yep. I don't see anything in here about the chaos theory. I'm starting to think that GPT just went fucking rogue. GPT didn't say anything about Susquehanna. Yeah. I think GPT went absolute rogue. Yep. So they're rich. Other address saw biggest tax scam in the world. Yep. This is normal though. Yeah, this is just tax. So for those that don't know, I'll take a pause here to talk about some of these things. And there are a lot of ways to very smartly decrease your tax liabilities depending on how you structure. As your total resources start to grow, you spend more time learning about stuff like this. It was a couple of years ago that I started doing a ton of research and meeting with different kinds of attorneys and tax preparers to learn more about how this stuff works out of curiosity. Now, the interesting thing is that something like this, depending on how it's structured, can be illegal. It can be perfectly legally set up. So I'm actually really curious what it thinks about this. Because right now we're essentially just highlighting a tax shelter. So now we're getting into like the location of stuff. Here we go. Whether you think this is wrong, right? Even loophole location is linked to 9.5 billions of taxes have been evaded as a result of this location. So yeah, because I mean, like this, I understand the point that people are making, and the other thing is that they're making the wrong comparison here. Just saying, like the number of businesses is part of the equation, but you can have a lot of entities in a small space. Now, obviously, this is clearly people that are tax sheltering, but I'm curious like what the tax shelter angle means to them, because I haven't seen that yet. How has Citadel evolved? Well, it turns out they have an entity tied to the Uglin house. Of course. That's right. The same entity connected. Yeah. Citadel operating multiple places. I'm struggling to understand what their connection between BlackRock, Swiss, and Citadel, Palafox. But I don't understand the implication. Like why, whether or not there's a connection between these entities, my default is rich, powerful entities all know and operate with one another. So I don't even think like taking the time to attempt to prove it per se, unless there's a direct implication of this explicit combination of the three of them. Also, the fact that they share the same kind of tax entities, like again, like smart, resource rich entities are going to do their best to be as efficient as possible. So the fact that they're using the Upland House or other kind of tax shelters, again, I'm not saying it's good or bad. I don't understand the implication that they're trying to draw from that yet. If you guys know, let me know. I love this little drawing though. This is rad. Yeah, here we go. Connection between this is incredibly complex moving pieces. Yep, 5D chess game, okay. BlackRock isn't just looking to kill off Melvin, maybe working with the government and Fed to make some major changes happen to the market, okay. End goal. Shit, bro. Not entirely obvious to me yet. I mean, that just seems like a lot of work and effort in tying obscure components together to arrive at something that I think we all know, which is any sort of powerful organization is going to try to push its agenda and inform the development of the landscape as it's relevant to it. Like, I think that that's just a granted. I think we all kind of know that. So this, I have to be honest, was it's a little unclear to me like what the specific thing is, but this is the part that I would want to see the author define more so that I could actually understand what the perspective and what the implications of the perspective are. Because again, like what I'm reading here is, yeah, this is kind of like, yeah, this makes sense, but this is also a default assumption in my opinion. We now have the inclusion of Gary Gensler, SEC, specialized cryptocurrency dark pool, called on the banks. Yeah. What the fuck? I have to be honest, this DD was a little confusing to me just in terms of what this is trying to prove or disprove. Because understanding that big entities are incentivized to push their own agendas, of course. Understanding that big entities are likely colluding with one another to better themselves, of course. So, yeah. Dayswag says, are people upset about resource hoarding and stepping on poor people to do so? I think that's bigger than that. Like, that's a really big statement. Yeah, I think, at least as far as I could tell, that seems like a big statement separate from this. You could always make the argument that big entities are inherently selfish. And I don't necessarily dig the stepping on poor people to do it. That's a little too specific and conflict driven, in my opinion. I think big entities will step on anybody to do it. I don't think that they're explicitly targeting poor people. I think big entities will target anybody that they can get money from or take advantage of. But yeah, I think, again, like, we kind of know that. We already know that there's corporate greed to a obscene level where CEOs are making tens of millions of dollars. I mean, like, that is just obviously massive pay disparity and stuff like that. So yeah, I guess I'm just, I want to understand as best as I possibly can. Some of you feel the fact that we have tax havens in the world aren't a big deal. What's interesting is that all these players are registered the same place, and it appears that the government wants to do something about it. It's not that interesting. It's an efficiency thing. So what this means is somebody in that building has found a way to set up a business service that allows other people to use that building for the tax haven because you need a local address. And that's all it is. It's not like BlackRock and the other entities are all like, oh, we all have to go to this house together. It's just an economy of scale efficiency thing. So another great example of that is here in California, there's a lot of laws, annoying laws, about vehicles. And the vehicles itself here, there's like, you can't have all different kinds of stuff. It's really, really strict. So there are places like Wyoming that people will set up LLCs to register the vehicle to, so that it doesn't have to go through California registration and smog. So it's like there are specific entities that exist online to set people up to do those kinds of things. It's the same thing as something like this. It's just an efficiency thing. So yeah. Lauren says, that's why I'll never stop laughing about Left crying on the news, because the internet was being mean. Did he actually cry? I didn't think he actually cried. I thought people were saying that he did, but I thought people were then saying that it was like an AI generated image. Because if he was actually crying, I 100% have to see that. I just saw it and joked about it. Was that real? Did he actually cry on the news or no? Because if he did, must see. Like, that's a must see event for me. But if he didn't, I still would like to joke about it. I think the crying thing was more on the verge of tears. I didn't see it. Yeah, okay. That makes sense though, because I didn't see any of that. It looked like he was just kind of smug. All right, here we go. Induced to a hype-induced market crash. I think we can generally scroll over this because from 2021, this didn't happen. We didn't have a market crash. So remember this thesis about the overall hype? Yeah. Let's see if I can just read the conclusion. We're going to have to get the apes to follow like standard paper writing format with like an abstract and conclusions. Now, this is where I connect the dots, form a theory. The majority of U.S. markets have switched from mortgage-backed CDOs to CLOs, foundation following the 08. If GME squeezes again, Reddit research counterfeit U.S. Treasury. Oh, Jesus Christ. The second GME squeeze to be so epic that the protective measures in place won't be sufficient. Okay, so we can conclude that this did not happen. I think I figured out what DFV knows. I am now very interested in this one. This one I'm absolutely going to read this whole thing because this I'm supremely interested in. If you look at the options volume, out of the money, 16 April, you'll notice that's much higher than any other time throughout the history of the stock. Yes. My belief that DFV knows that Citadel has no long positions in GME and only has calls and puts in GME. When your options expire out of the money and you have no other positions in the stock but shorts, you literally have nothing. Huh? Makes sense as to why the shorts have been dragging it out this long. You never give up on an option until it expires. That's not how that works. If there's a chance, there's a chance. You still have skin in the game. Institutions don't work like this, man. Like, just to be clear. We can say what we want and we can think what we want about entities like Citadel, but they are exceedingly proficient at what they do. And they're not going to maintain an options position because of hope. Like, that's just not how they're going to run position. If your options expire out of the money, no long positions, you have no leg left to stand on, no more skin in the game, nothing else you can do but cover your short positions. I don't understand what this means. They don't have any skin left in the game and any more legs to stand on. What? Why not buy your puts then for a year? The week of 16 April, stock was 485 per share and going down. Yeah, this one's, I think, tough. DFV knows this information and matched their puts with calls. And being on the winning side of the equation, he exercises options and quadrupled down. Oh boy. Yeah, I struggle with this one. I think that there's just a lot of random stuff in here, to be honest. Row Entity says synthetics via options. Yeah, but the thing is, like, you can continue to set up synthetics. That's the thing. It's not like this doesn't make sense to me. The fact that they're saying they have out of the money options and they're holding on to them for hope. They literally can just continue the options position. You just roll it. And they absolutely have the money to maintain the position as long as they legitimately would want, if that's the case. So I don't think that holds any weight. I also don't think this idea of DFV knowing whatever this actually means and then matching puts with calls, like, that doesn't really mean anything. And then I also don't think he exercises options. So, like, there's a lot of tricky things in here. Have been fighting because they had a leg to stand on with their put options. They don't. I don't think this is as obvious as they might think, to be honest. Like, I have a million questions here. Why wouldn't they just continue if this is the center of gravity for their position, the options trade, why would they not just continue the options position? Like, I don't get that. Yeah. This one a little tricky. All right. Why trading halted in January? Well, I think we kind of know this, don't we? The fucking market was about to explode. Citadel's plan is to route retail orders through a system as possible. 70 to 90% of retail traders lose money. I hate statistics like that, but it's not fully inaccurate. by issuing a short share on the trade instead of locating it. Yeah, so we know that we're doing this. This is same. This is why Citadel to shut down trading and why robbing you. This will never not be funny to me. It will not be funny to me that I'm sitting here on a fucking YouTube live stream, really like trying to understand the theories and the assumptions about market microstructure and stuff like that. And I'm learning from people called robbing your mum. Only shut down trading on specific. I love that they call them this. And that's why we just heard the last congressional hearing directly from DTC. Yes. Lauren says the market almost exploded and they made a video about retail trade. They made a video about retail investors doing research. What was it? Lauren, what was that? Do you have the video link to that, Lauren? I would love to watch it. Bree says someone messes up option talk, Eric, and I took that personally. That's so funny. Well, it's because people will say things that are really half-baked, and it's like supremely misleading for other people that don't know any better. So my preference is if somebody doesn't know something about something, just don't talk about it. Just leave it alone. That's why with a lot of the GameStop stuff, I don't talk about it because I don't know a lot. I'm spending time learning, but I'm nowhere near it. Lauren says you didn't see it. I don't know. Citadel's market maker for 50% of retail trade. Oh no, I didn't say Siri. Chill out, phone. And every single position went up huge same time. Citadel was caught on the line. They're providing liquidity retail. Exited before the squeeze, run up, no time to reverse the positions. They're now locked into, assuming that every share purchased during the run up also wasn't short shares. Citadel page states our automated equities platform. Okay. Okay. Interesting. Citadel built Melvin. Yep. So how do I think Citadel and Melvin wound up holding short positions created by Citadel if there's supposed to be a firewall? Yeah, we know that. I love the TLDR here, though. Big fan. The tricky part that we have to say is that, again, this is one of the problems when people like to promulgate something that they want to be true or want to believe. Because when we say something like hedgies are fucked from 2021, the reality, like the overwhelming reality is that genuinely, like that, as much as I don't like them, they're still here and they're still making buckets of money. So I like the message and I like the idea of like trying to call out the errors and stuff. But I think one of the problems here is that the hedgies unfortunately are not fucked and they're continuing to make buckets of money as they tend to do, because I don't want to go quite as far as saying something is like too big to fail, because something can always fail, but they have so many disgusting internal efficiencies built that they're not, again, I wouldn't say that they're too big to fail, but they're not that far off of being too big to fail. And they have a lot of really, really, really like big advantages that other elements don't have. which is one of the reasons why they continue to persist like they do. It's annoying, but it is also one of those it is what it is kind of things. I'm thinking Italian for dinner tonight, eh? Italian sounds perfect. Cool. Roaring Titty says in the congressional hearings during the 2008 financial crisis, too big to fail. Yeah, exactly. And that's why too big to fail is such a nefarious concept, because something is too big to fail until it fails. But there are massive, massive economies of scale that bigger entities have, like these guys, that make it really, like, again, objectively speaking, a lot of these hedge funds literally should have gone bankrupt during the squeeze in 21. The entities that were so short and did not cover, they absolutely should have gone bankrupt. But because they were, in a sense, too big to fail, because it was going to start jeopardizing the broad market, they essentially were bailed out. It's complete and utter bullshit, but it is what it is. So the too big to fail thing, unless something is, because in that case, if quote unquote nature was allowed to take and run its normal course, well, that wouldn't have happened. And they would have been pushed out of business. But that is not the case. I have to call Mel and make sure she orders her dinner. Normally she doesn't answer this one. She knows what I'm calling for, though. She sends me to voicemail and then she'll take a look. Communication 101. And there's the text. Okay. What is this? Do you guys know what this one is? Reese says, I fail to see how a collapse in the financial system would result in a win for anyone. Oh, it absolutely wouldn't. Like it would not. Retail traders would lose the money. But what happens, Reese, is people get so wrapped up in trying to seek vindication that it's like scorched earth policy. I guarantee you that there are swaths of retail traders who would have been fine letting their $5,000 position eviscerate as the financial system collapse just to watch hedge funds and other entities that they don't like fail. It's very much the case. And I also want to be clear, I don't blame them. I don't blame that perspective because it's very, very frustrating to see. Now, from a practical standpoint, obviously that makes no sense because I'm in markets personally to try to make money. And if there's no financial market, then it's real tricky to make money on something that doesn't exist. So from that perspective, it doesn't really help us much. But from the perspective of people that feel like they've been taken advantage of, they feel like there's structural inequity and things like that, folks like that are way more willing to go scorched earth and just let the cards fall where they may. So and again, I can understand the perspective. It's not practical. From a logical perspective, it literally doesn't make sense. But from like a human perspective, it makes sense. I can see it. But yeah, okay. So let's keep going through this. Things of capital, participation, long-term power. Yeah. The fuck is this? We literally need to have abstracts. Sits on the board, vice chairman. Funds are managed by Blackstone. Looking to merge with Citadel. Ooh, I like this one. We're all fucked from 23 May. So no background. In fact, I'm in healthcare. What I've gathered are 3 months of investing, 3 months. You tell me what you think. The title of my post pretty sums up if I make any mistakes. Okay. So I'm realizing I'm going to have to go through these a little bit faster. So here's one of the problems I'm starting to notice with some of these DDs is that they're like genuinely exceedingly inexperienced people, which is fine, right? And it's okay to put a DD out and it's okay to share your information. No problem with any of that. But these kinds of like really hyperbolic stuff from people that are really inexperienced, in my mind, they get very little credence. I spend very little time on stuff like this. I'll still flip through it out of sheer curiosity, but it's 2024 now and we're not fucked. Things are still moving along, chugging along okay. So what you'll find is people really like to talk about this kind of stuff. It's why if you open up news, most people, you'll find that like you'll get news fatigued. The reason why you get news fatigued is when you open up the news, it's always all this horrible shit that's happening all over the place. And it's because people are drawn to that like moths to a flame. For whatever reason, people love some bad shit going on. So this kind of stuff almost always will gain traction and is a very appealing angle for people. It's for that exact reason. It's because it's engaging. So it's always easy to talk about how things can go wrong, how bad things are, and the reason why I'm talking about this specific thing is because I've seen different versions of this throughout. I've been trading 17 years now. I see this happen all the time, every single fucking year. I see people talking about the end of the world, how it's here. It's just so common. And there are always things that knock us down. There are things that slow us down. But I am very bullish on the US economy, the stock market, and companies as whole. There's all these pockets of things that kind of suck, but writ large, super bullish. I'm naturally a cautious optimist. And so this kind of stuff, especially with somebody that has 3 months of experience, again, I don't fully dismiss it, but it definitely, like, the weight in my mind gets nerfed massively. And it's not out of any disrespect to this person, but 3 months in markets it's literally laughable. Nobody's at any point in 3 months to talk about shit in the markets. It literally takes probably 3 to 5 years to genuinely get your fucking feet under you. That's not even at the point where I would consider that person supremely proficient or anything like that. I've come across plenty of traders that have done super well over 3-year, 4-year periods, and they are exceedingly confident because they've crushed it for a specific period of time until they realize that they've only seen one element of the market, and then the market throws a curveball, something new comes out that they haven't seen yet. They're way too overpositioned because they're way too overconfident because they haven't seen what they don't know yet, and then they get fucking smashed. So to me, the main thing that is a dominant function of market proficiency is consistent return and staying power. So Roaring Titty says the dude says he is new and explain if he's wrong. He's not stating it as fact. Oh, definitely. Yeah. I'm not saying anything negative about this person at all, because if you recall what I said in the beginning, it's completely cool for them to write up their thoughts and what they think. I'm talking about the much larger perspective of these kinds of angles that people take. I'm not talking about this person's angle. I haven't even read it yet. It could be fucking genius. I don't know. I'm just talking about this general angle people take because I've seen it my entire trading career. I will continue to see it my entire trading career. It's not going anywhere because this shit's in vogue. Okay, so let's see. S&P 500 inflation yield that's now falling below 0, 40-year low. Yep. Repo market Yep. You're not familiar about repo market. Yeah. Too much cash in the system, not enough collateral. So one of the issues is in this where we're making a mistake in analysis here. The reason why we're making a mistake in analysis here is because of how impactful a period like 2020 was and all of the subsequent outputs from COVID and all of the financial and economic functions that went into place during COVID. You can see we're literally still dealing with it now in 2024. So comparing this kind of stuff to other reference periods is slightly faulty, literally from a landscape perspective alone. I'm not saying that there's no weight in any of this. That's not what I'm inferring. I'm just saying we have to take the broader context into context here. Royntity says it was the collective effort for people who were getting run over in the market because they didn't understand it, researching and learning together. Yeah. And again, I agree with that as well. I think that's good. I think the issue I have is the we're all fucked. That's a definitive statement, right? And again, this is a definitive style statement that a lot of people will take all the time. Now they go on to say that they're new, which is cool. But for somebody with very little experience to open with this, again, it's just not a great attribution for the rest of the research. But again, like I said, I'm always going to read through stuff because you never know. Too much cash in the system, not enough collateral, which again, that's sort of true, but the repo market is a little bit different than that. Yep, this is good. Yep, this is good. Crypto correction. Okay. I mean, okay. Rich divorcing or selling stocks. Okay. So when I'm reading through this, there's a very specific theme that I'm picking up. Do you have any idea what it is? It is a very normal cognitive bias. It's super clear. So when I look through stuff like this, a big thing that I explicitly want to see is how things are positioned and what angles are we taking. So far, as I'm reading through this, I'm seeing somebody that's seeing what they're looking for. That's what I'm seeing. And we also talked about this in the beginning with some of that other DD that we were talking about. And this is one of the most common biases that you're going to see is confirmation bias, anchoring bias. These are things where we come across artifacts of stuff, and then all of the subsequent research that we do goes to the effect of how can I find things that bolster this point that I have. So one of the things that I look for in stuff like this is how well do they steelman their own position? Because they're looking at a lot of things that are slightly related, slightly not related, like margin debt, for example. Margin debt is way, way, way more complex than looking at a tick up in margin debt from different timeframes, again, through a global pandemic, what that might mean, also what the new financial picture might look like. So, yeah, I believe, like, they're literally talking about fucking FDIC insurance. That's like end of world kind of shit. So to say stuff like, my goal is not to incite panic, but then to say, for those panicking, I think you can cash in on your FDIC insurance. That's inciting panic. Like that's what that is. Interesting. I mean, it's an interesting thing. It's cool to see somebody learning about economic functions, but it also highlights how complex economic markets are, economics and markets are. They're massively, massively, massively correlated, but they're so specific to individual circumstances, context around what's going on in the world today, that it's very difficult to run through this kind of analysis and to come up with make sure you're in an FDIC insured bank. Yeah. Roy Entity says, don't forget last year the FDIC had to bail out banks, or is it 22? You mean with Silicon Valley Bank, SVB? Is that what you're referring to? Reverse repos showing possible evidence of forced liquidations. Okay. I think we can breeze through this. I think we might be seeing forced liquidations given that the connection between counterparties price surges GME is correct. When was this? 27 May 21. Okay. DTCC, Wall Street want key things in place before GME unwinds. Now we're looking at a list that is most likely checked off. Rocket about cleared for launch. So this... I want to find the 28 May. May 28th. So they didn't quite top tick it, but they were close. And this is top ticking it from the wrong sense, because I think this is the highest GameStop hit before it started contracting down, if I'm not mistaken. I'm going to grab another mango orange. I'll be right back. All right, we are ready to roll. Okay, let's see what we got here. Yeah, so this, I mean, this is about as close as they're gonna get. Yeah, this is about as close as you're going to get to like top ticking it before we had the rest of the rotation down. So I don't know, you can kind of, this is one of the things when you're reading through a lot of the due diligence and what people think are going to happen is you have to pay pretty close attention to the timing and the fact that most people are just guessing, right? And most people that I read here are actually very, very cool because they identify that nobody really knows what's going on and we're trying to figure it out. The problem is that if you read through a lot of this and you don't continually remind yourself of that broader message, you become desensitized to the people saying, I don't know what I'm talking about. and you start onboarding the broad messages that are there subconsciously. So, and I'm not saying good, bad, and different. It's just that you have to be really thoughtful when you're receiving and perceiving the information from stuff like this. Because, I mean, this objectively did not happen, right? The GameStop did absolutely rally, but my guess is it's not to what they thought was going on. And you can see what a lot of people will tie things to try to further elucidate their point or validate their point. One of the things I would love to see in the DDs here, and it's the same thing that I do in all of my strategy outlines, is I have a section that literally talks about when does this not work? When does this strategy fail, right? It's specifically reminding myself to look at the flaws and to steelman, to look at the other side. A lot of what I see here are people seeing what they want to see. The guaranteed short squeeze trigger, the NFT crypto digital dividend. Okay. One proven way to trigger the short squeeze done by overstock. When a hedgie shorts a stock, they borrow from a broker, real owner sells it. Because the one who purchases it believes he's also an owner, single shares two owners when well, sort of. This is, just to be clear, when things are working as they should, you have to elect to allow your shares to be loaned out. So, yeah, when they're working as they should. When a company then pays a dividend, both owners expect a dividend, yet the company only pays dividend to the owner because the broker only holds. This is also not fully accurate. So when you're short shares, you pay the dividend. So, yeah, I'm confused on that. The dividend for the fake share is paid out of the short's pockets to make the whole system. Yeah, okay, so this is correct. So this one confuses me. Roy Entity says if you use margin, you are opting into share lending. Potentially. You can still elect more discreetly than that with some brokers. It's not just margin, ipso facto, I am now agreeing to lend my shares out. You can, I don't know, it depends on your broker. But a lot of brokers will still permit you to say, don't loan my shares out. When a company, let me see, because the one who purchases it believes he also is an owner. But this doesn't make sense. When a hedge fund shorts a stock, they don't think they own it. They're shorting it. So I don't understand this idea of two owners. There's not two owners. When a company pays a dividend, both owners expect a dividend, this is also not correct. The person who shorts does not expect a dividend. It's structurally not there. If GameStop pays a crypto digital dividend, then in order for the system to continue, the shorter will have to find and acquire this NFT dividend to give it to the guy oh, I see what this is. Okay, got it. So there's just, I see. Okay. Follow up to the House of Cards. I'm going to try to scroll through these a little bit quicker, and I'm going to flag the ones that I want to go back to. It's just because we're only at page 300 of 842. This is going to take forever for us to like meaningfully get through these. And some of them, I don't want to say that they're not good, like they're fine for what they are, but I think some of them are less informative than others. Let me see. I want to see if I can scroll through this faster. Why does this scroll so slow? How does this make any sense? Because I also can't trust ChatGPT to summarize it. It did not do a good job summarizing. Wonder if I zoom out like this. No. There we go. That goes pretty quick. Perfect. We found a way to cheat the system. I can't read anything that's there, but let's grab this and then summarize this article. Ah, perfect. This is fantastic news for us. Roy Entity says Shitadell is controlling the scroll. They're in the computer. The files are in the computer. I got to move this over here because now I'm using other windows and shit. Also, shout out to you guys. There's 80 people hanging out right now, learning all about corrupt market structure. And bigger thing, hopefully, is I genuinely am hopeful some of you are learning some of the stuff that I am as I'm going through this. I know a lot of you will know way more about this than I do, right? I continue to reiterate the point that I am a guest in the GameStop house. But even though that's the case, I'm hopeful that as I go through individual things like this, people might be picking up elements that they might not have seen before, because I think that that's really, really useful information to build over time. So that's at least my hope. All right. So let's see what GPT says. Article attached discusses the concept of everything short. The series suggests that several hedge funds have been strategically shorting a wide range of stocks to manipulate market dynamics. Okay. Hedge funds like Citadel, Melvin Capital, and others develop significant positions in various companies. Funds are accused of systematically shorting stocks of companies that compete with their favorite investments. Sure, I could see that. The author implies that these hedge funds engage in practices that resemble market manipulation. They might short stocks of companies like GameStop or AMC to suppress their price while supporting competitors like Amazon or Netflix. So here's the problem that we start running into here is when we're talking about systemic shorting like that to that scale. I'm not saying it can happen, it can, but it becomes really, really difficult to do so. And the reason why it's difficult to do so is because markets are consensus-driven pricing mechanisms. So unless that there's other entities that are also in collusion that are like, yeah, okay, we'll just let this thing get crushed. Sooner or later, there will be entities, even like Ryan Cohen. He does it not in an investing standpoint, but in terms of scooping in on businesses and turning them around. Investors will do that. Traders will do that because if we see something that gets pushed down to a level that doesn't make sense based on the valuation, a lot of people will enter into that market and buy it because it makes sense. It's such a value. And this straight up has been the case. You can literally see it happening in GameStop. If we zoom this in, you can see GameStop got absolutely punished. And it's because, objectively speaking, the business of GameStop during this period did not look great. I'm not trying to talk shit. I know that people get sensitive about that, but it's completely true from an objective standpoint. It was a brick and mortar based business that's a tough way to succeed in an exceedingly digital market in a place where people aren't buying consoles and games physically in store in mass anymore. Most of it's done at home via Amazon, and then you buy the games on the console. So I've been playing a game called Starfield, which is actually super cool. You get to cruise around space. But then GameStop starts to turn things around pretty massively. And that's why I'm so excited about the move from here, because the move from here is market internal driven. This move happens because people are starting to see options activity. I saw the options activity. I start to get in because there's activity. Other people are in, and it incentivizes participation in that way. That's great. Then what starts to happen here is different. This isn't being kicked off because of a lot of transactions in options markets. The options markets are busy, but they're not crazy. It's nothing like we saw in the beginning of the, well, I guess in the middle of the year in the summer. So the movement that you're starting to see now is an artifact of people fundamentally valuing the company differently. That's important. So taking that all the way back to what I'm reading here, saying that, you know, hedge funds are essentially manipulating the market to drive price down, it can happen. I'm not saying it doesn't, it does happen. But if there's underlying value in the company that's seen, accepted, and understood, there will be people that are going to buy it because of the fundamental components of the company longer term. And that will in turn put the shorts in a really tough position. So it's just not as simple as saying hedge funds are doing blank, because hedge funds have a lot of resources and power. There's a lot of different hedge funds. We can't bucket them all the same. They do different things. They have different imperatives. But there's also a lot of market participants with different ideas and approaches. That's important to identify. Okay. The next thing this article talks about is connections between various companies and hedge funds, points out how hedge funds have stakes in companies like Zayo Group, VIC Properties, indicating a network of investments that influence market behavior. Completely agree. The author notes that stock charts for companies like Five Below, Amazon, Walmart, and others show patterns inversely related to GME's performance. We've looked at this a million times. And I think that the correlations are, that's, you can't, like, that statement doesn't mean anything. Stock charts for companies like Five Below, Amazon, and Walmart inversely related to GME's performance. Those are people that are just typically eyeballing a chart. We've done this a bunch of times on the live stream, that are, again, seeing what they want to see and not actually doing like a correlation analysis or a regression. So I'm not saying that they're not inverted. I don't know in this instance, but I would guess that that's the case, because companies like Amazon, what did it cite? Companies like Amazon and Walmart, they're fucking huge. So the idea that one of them is being suppressed to prop the other one up would be dubious. I don't think that's a fair assertion to make. And then the article warns, if GME experiences a significant short squeeze, it could trigger similar events across other heavily shorted stocks. This could lead to widespread financial repercussions for involved hedge funds. Yep, I think we know that. Okay, cool. So now let's zoom in on this one. Reverse merger naked shorts in covering. The golden bullet. Interesting. Well, they didn't, I don't think they did this. So interesting. RC Ventures GameStop agreement, reserve the right to acquire 19.9, taking full control, bigger stake. Okay, so yeah, I think we can skip through this one. Because this just didn't happen. Oh, here we go. Oh, Big Daddy. Let's see. Oh shit, he just called social media unverified information from unqualified social media. He obviously hasn't seen the DT on Super Stunk. That's awesome. Volume catalyst, we already talked about that a million times. So I agree with the volume component wholeheartedly. In my opinion, volume is the defining feature of detecting price movement in most things, specifically GameStop. It is the only thing I can point at that every time there's a big run, it's preceded by volume. And I've not seen that with anything else. We've had every kind of interesting idea about what's driving price movement and stuff like that. But regardless of all of that, none of them have moved things quite like volume. So volume has to be there. I agree with this. Here you go. What can you tell us about volume when there hasn't been? Johnny, volumes, unbalanced volume. Okay. Going to take this from other posts. The commonality between all these graphs is unbalanced volume continues to increase. Okay. Okay. So one of the issues with this is like drawing any sort of standard technical analysis lines. I think these are Ichimoku clouds, by the way, here, if I'm not mistaken. Is this right? But drawing technical analysis like this off of a squeeze doesn't really make sense, in my opinion. And the reason why it doesn't make sense is because you have to apply a completely different style of technical analysis around squeezes. You can't apply standard support. Like, think about what technical analysis represents. It represents analyzing the relationship between buyers and sellers in an open marketplace. So it's looking at price and volume. Well, price and volume, as represented through supply and demand, those functions have certain inferences we can make from them that completely break down during a short squeeze. People that were buying GameStop at $500 were partially psychotic retail traders that are trying to see how much money they can make, hoping it goes higher. And I say psychotic just because that's a massive amount of money to pay for a stock that just before was down at whatever. So it would have worked if necessarily they weren't stuck when they turned the buy button off and price was allowed to continue to move. But that's before financial ruin of the markets, in which case nobody gets anything. So that part aside, the entities that are buying shares there, they're not buying it because they actually think it's valued at 513. They don't think that the company's fundamentally valued there. They're buying it because they quite literally are forced to cover short positions, which is great. Fuck them. But that's not standard supply and demand functions. It's very, very unique. So you have to apply a completely different methodology. So I actually think drawing lines, like basing things off of this, is a broken methodology. But just because I think it's a broken methodology doesn't mean it doesn't work, doesn't mean it's not efficacious. It literally doesn't mean anything like that, because technical analysis is very much part art, part science. So they're fully entitled to do that. That's just my personal opinion on it. Yep, so I saw Ichimoku. I don't see the MACD oscillators, and then they have TTM squeeze. Yeah. So TTM squeeze is just like a volatility metric, essentially. It uses two different volatility tools to measure vol. Yeah. Okay, so here's all the TA. What's the... I'm not going to waste a bunch of time. I just want to see what they're... I like the stock. Anything you take away from this, remember, volume is king. Short squeeze has not happened yet. This is great. Volume is king. The short squeeze has not happened yet. I understand what they're inferring here, but again, just for clarity's sake, a short squeeze absolutely has fucking happened. Probably the biggest one that the company will see, at least uninterrupted. And I emphasize that point because the uninterrupted component is huge. Does this mean that there couldn't be a bigger short squeeze in the future? There always could be, right? The worst days, depending on what side of the trade you're on, are always ahead. So that, I think, is completely fair. And to think that there could be a bigger squeeze in the future, I think that's completely fair. The problem is, at what point does it get stopped? That's the problem. And we already know that they stopped the first one. They cut the first one short. And the first one was overall lower magnitude. So the probability of there being another short squeeze that's equivalent or bigger, I think would be difficult to justify. Again, from a practical standpoint, not from a structural standpoint, not saying that there aren't the conditions for it to occur, but at what, and this is one of the things that I notice is missing from a lot of the due diligence and positions people will pose, is that we don't apply a practical methodology of the fact that it's going to be interrupted. Market forces, external, will interrupt it, just like they already did. So they've already showed that they're not willing to allow the financial system to collapse because of this. And again, from that perspective, I don't blame them. I don't want the financial system to collapse either because of this. But it would be really cool to see if there's a bit of a line that's balanced, where we actually allow some of the hedge funds and stuff to go out of business, as they should, and they should be forced to buy it at $500 price. Fuck them. But we should essentially allow those hedge funds to run until they are fucked and completely illiquid. And then it should be, I think, sequestered so that it doesn't destroy an entire financial system. But yeah, I understand the sentiment here, but I make that point for everybody because I know everybody's really, really interested and hopeful for MOAS. But one of the things that I haven't heard an explanation for, which I genuinely am interested, I genuinely am interested in hearing, is how does the theory of MOAS apply if the squeeze that's coming is supposedly bigger than the squeeze that already happened, if the first squeeze was already interrupted? I don't understand that logic. Roy Clitty says, the thing is, if you apply that practicality to a DD and post on Reddit, then you're downvoted to hell and called a shill. Understandably, because it's a community and group of people that have been manipulated for as long as they've been around. And I think that there is an element of an echo chamber where people don't want to necessarily hear too many things that are far too different. But from what I can understand and see from a lot of the ape community, it does seem like there's a growing appetite for healthy discourse and exchange of ideas. So I think that it's not necessarily that far out in the future where you can have a legitimate conversation about these kind of things. I think a lot of the people that get called a shill, rightfully so, are people that are just bad mouthing things with uninformed opinions and not something that's well researched. But for example, the comment I make that a lot of people would call me a shill for on there is saying the statement that I don't see a larger squeeze happening if the first squeeze was stopped. So, but the way that I phrase it is as a question, because it's a genuine question. The genuine question I have is, how do we rationalize that there would be a bigger squeeze in the future if the smaller squeeze was manually interrupted by market forces? And I'm not saying that there's not an answer to it. I hope there is. I just don't know what it is. I haven't heard it yet. That's something that I've talked to Newton about. And that's something that he and I have talked about on the live stream before, because there isn't, again, like I just haven't heard a solution to that problem set yet. The mystery of negative beta. Okay. Let's zoom this one out and see if we can. This is a cheat code. It still scrolls really slow, but when it scrolls slow, it's doing like half a page at a time. So we can get the deets. And then I think we'll probably pause after this one. Lauren says, retail traders are learning, got to give people room to grow. Absolutely. I still think GME will pop a little. Oh, absolutely. And again, I want to be super clear. That doesn't mean that it can't squeeze. I think GME is one of those companies that's literally primed to squeeze. I'm just clarifying the idea of, I think we need to be able to answer the question of, how does MOAS happen if the first squeeze was cut? And if there's a really good answer to that, which I genuinely would love to hear, then I think that's what I'm interested in. Because just because I don't know the answer, how it might work, doesn't mean that there's not something there. I just don't know it. And it's an example of why I would never make a post of something like, there's no short squeeze, right? Like a lot of the people will say we're fucked, but they'll share an opinion that's, again, is informed as it can be for them. But I don't feel comfortable saying something like even that there's not going to be a bigger short squeeze. Like I won't say that because I don't know. But what I do know is that there's definitely a logical gap that we have to work through. And I don't know the answer to yet. Summarize this article. Let's see what this says. Roy Clitty says, would change in ways for allow it to continue. Hold on. Ron Clitty says, so let me preface by saying I don't personally believe this, but the answer to how could there be a bigger squeeze is that regulation, both internal and external to the financial system, would change in ways for allow it to continue without interference. Right, but that argument doesn't make sense because the reason for interference previously was literally to prevent the meltdown of the financial system. So there isn't a scenario where there's enough regulation that would allow more risk assumption. Now, I do think that there's a world where the squeeze could be permitted to the point where individual hedge funds might literally go bankrupt. But I don't think even an amalgamation of a lot of those hedge funds would be enough money to yield like this massive squeeze. TCM says bigger squeeze because the first time there were several stocks squeezing all at once. 2 of those companies already went bankrupt, so pressure is already less. I don't think that explains it either, in my opinion. So to clarify the position I'm offering is the last squeeze was interrupted because there was a potential for literally the financial system to collapse. That happens when there's a certain amount of risk out that's uncovered for whatever reason, and that there's enough variance in liquidity that can yield that kind of collapse. So if external entities stepped in to stop that from happening previously, I don't see how there would be a world where we would permit more risk if the last round of risk was already capped lower. Rowan Clitty says, the way you're talking makes it sound as though you think some sort of pre-existing safety triggers were tripped. No, I don't think that. I don't even know if those exist. I don't think that at all. The pre-existing safety triggers and stuff like that would be things like, circuit breakers. But yeah, I think circuit breakers are completely different than that. Rowan Clitty says, what external entity stepped in to stop the last one? The brokers. So the brokers across the board turned off the ability to buy shares. Lizzie says, do you think there will ever be any type of accountability for allowing it to get this bad? Fuck, I hope. I think that there's a potential, but the problem is that in general, the accountability component there is directly disincentivized from the largest constituents of the system. So I think that there's a conflict of interest from their perspective to actually gain accountability. So I think that you would need to have some sort of very aggressive entity that enters SEC, FINRA, like these different oversight commissions and organizations that actually doesn't care about the conflict of interest and the potential harm that comes from moving through it and pursuing it that way. But there's so much conflict of interest in lobbying that I think would be really difficult. Yeah. Lauren says they weren't expecting GME to do what it did and they took care, and who they took care of is very telling. I agree with you. Fully agree with you. DCM says the buy button was turned off because of a massive fake trade that was immediately reversed. And that's why the buy button was turned off. The financial system wasn't going to collapse, only some larger. I actually don't agree with that. And I think that the reason why I don't agree with that is because there's entities way smarter than I am. Pt4 is one of them that was talking about like where that could potentially go because of how pervasive it was. So I do think that the entire financial system genuinely was at risk. And I think that that's also why there was, again, a pretty unanimous effort across the board to disallow continued investment in it, at least to the long side. Matthew says, got to bounce. Good live stream. Thanks, Eric. Yeah, you got it. Yeah, if it's already been 2 hours, I got to wrap up soon. But let's see what this one says. So this says, GameStop's negative beta discusses the unusually negative beta of GameStop. I have to look into that more. Impact of short selling, market manipulation, and short squeeze. I don't know how they're arriving at negative beta here. Carlos says there will be no GME squeeze. Get it through your thick head. I actually don't agree with that either. I absolutely think there can be a squeeze. I think the nature and level of a squeeze can be different. But yeah. All right. Let's add a comment here. This will be 30, no, leave off. This way we can find that again. Very interesting. So to summarize the multiple DDs we went through and just kind of at a high level, what I'm seeing a lot of really pervasive focus on manipulation, which is fair. The various entities and the relationship between entities, which I think is good. I see a lot of confirmation bias in trying to paint a specific picture that people want to see, which is very normal. I see a lot of loosely formed opinions with respect to future price direction. So example being the one that's talked about we are fucked, and then the other one that talked about the TA on GameStop, which is, again, that's not a dig at any of them. It's just people taking guesses and trying to piece together what they think is going to happen. I also see the overwhelming majority of what we've read did not happen, at least in terms of price performance so far of GameStop. So the one entity that said we are fucked, that obviously hadn't happened. The other entity that was talking about the reverse merger, that didn't happen. The one that was talking about the technical analysis of GameStop and their price projections, that one didn't happen. And again, I'm not saying this in a judgmental way as if I know what's going to happen. I have no fucking idea. I'm just trying to recount what we went through and what the trends are that I can piece together from a high perspective. So a lot of work goes into these. The other thing that I definitely can pick up on is the level of interest in GameStop is insane, in that people are clearly willing, like that one that was going through the tax shelters and stuff. That's a very edge case peripheral topic that somebody spent a lot of time digging into the very specific details that they were able to piece together, which is really impressive to me. The fact that people do that. It's very cool. It's one of the reasons why I'm so stoked and eager to continue learning about GameStop and, you know, what we can pick up. So I'm excited to keep working through the DDs that we have. I actually think what I'm going to do is split this though, because we're actually making pretty good progress at this point. And if I split the document, I should be able to move through it through the AI thing in here a little more efficiently, which would be cool. So before we wrap though, is there anything else that you guys want to take a look at? Obviously, we'll continue the DD, I think next Saturday. Yeah, next Saturday is good. We have a bunch of travel next month, so you'll see me on the mobile setup again. But yeah, let me know if there's anything that we want to hit real quick before we bounce. As always, thank you guys for hanging out. I've been seeing people sharing the live stream around, which is awesome. I'm really appreciative of that. That really helps me because it helps grow our audience, which then helps inform where I get information from. And I essentially continue to cast a wider net because you guys are helping me and teaching me. So thank you all for that. Anti-government says thoughts on Archer Aviation. These streams are really specific to GameStop. So I'm happy to talk about that if you want, unless you think it's related to GameStop somehow, then I'm happy to look at it. But otherwise, you can always bring that up on like the Monday live stream or the Friday live stream, something like that. But yeah. All right, guys. Hold on. Ryan Clitty says, did we ever put together a full-fledged meme stock portfolio? That would be cool to take a look at if we already have it. Yeah, so I think we built that a little while ago, and I was running it for a little bit, and then I reconfigured the live schedule. So right now, we can probably talk about it on Monday during the Monday live stream at some point. That would be okay. But yeah, right now the live streams are Monday is YouTube, Wednesday is Outlier Pro, Friday is options trading basics, Saturday GameStop, Sunday Outlier Pro, and then Tuesday, Thursday is kind of just trader hangout as it's coined now, which is just a chance to bullshit for a little bit and talk markets. So TCM King says GME isn't a meme stock in my opinion. That's a completely fair opinion to have. I think it objectively is, but I think it's because people have a really negative connotation of meme stock, and I don't think it's a negative connotation. I literally think, based on the original definition when we started that series about meme stocks, it's literally stocks that are popularly talked about. And I don't think that that's a negative connotation at all. I think a lot of people apply a negative connotation that it's like some sort of like uninformed position or stuff like that, which I would agree. Like, I don't think that's it at all. And I also don't think GameStop's price mover right now is just hype at all. I think GameStop has a completely viable underlying business and they're starting to pivot. So that's what I think. All right, y'all, enjoy the rest of your weekend. For the Outlier Pro members, don't forget to do your performance AAR for the month so that we can review them tomorrow. Be an outlier. I will see you all later.